Hey everybody, it's Josh Alexander, and this is your Orange County housing market update for the end of May. So we're going to be going over three things today. So one, we're going to talk about what the Southern California and Orange County housing market has been doing over this month. Two, we're going to talk about some of the positive news we've seen with forbearance and foreclosures in the last week and a half. And third, we're going to talk about some of the areas that are going to be hit the hardest because of these shutdowns that have happened, as well as some of the areas experts are starting to see some positive news for and that might show explosions in the next couple years because of the effects of this coronavirus shutdown. So let's get into it. Okay, so really quick before we get into the data today, I just wanted to make a quick announcement to let everybody know that as of today, we're going to be broadcasting all of these through podcast form as well. So if you want to listen to it instead of watch it, please feel free to go to whatever podcast you use and just type in Orange County Housing Market News and hit subscribe. I'd really appreciate it. So now let's get into the numbers. Okay, so let's take a look at what the Southern California market has been doing in the month of May. So for all you data geeks out there, let's look at some of that data and look at the numbers to see where we are and where we're going. So over the month of May, demand has gone up by a staggering 47%. I've been saying this the last couple weeks as well, but demand is skyrocketing over the month of May, while supply in Southern California in general has only gone up by about 2.5%. So I am starting to see some encouraging numbers over the last 7 days. Supply is starting to increase a little bit faster, so that's a good indication that sellers are starting to become more and more comfortable placing their home back on the market as some of these lockdowns lift as we go through the different phases in California. So even though supply is starting to increase a little bit quicker, because demand has been exploding all month long, we're still going to be in a seller's market in most of Southern California under the $1 million price point. So what is a seller's market? A seller's market is basically the time you put your for sale sign up, so the time it goes on the market to when it goes into escrow. If that takes less than 90 days on average, then you're going to be in a seller's market. If it's less than 60 days on average, then you're in a hot seller's market, which is a lot of counties and a lot of price ranges right now in Southern California. So another indication of how much demand has gone up is something that we track called Showtime. And Showtime is the app that realtors use when they let you into a property. It basically logs those locations as well as how many people are going through them. And what it's showing is that the showings that were happening at the beginning of March, before everything started getting locked down, were basically at that same level now. So during March, at the very end, we took a dip when everything got locked down, but we're back to where we started when you look at the showing time data. So there's a lot of buyers out there looking at properties. Another good indication is for 5 weeks in a row now, mortgage applications have gone up. So we're basically only about, I think it's about 1.5% away from the normal amount of applications we have during this time of year. So we're almost at basically the same amount of applications that we had last year at this time. So again, demand has gone up significantly this month. Supply is going to start catching up, but it's taking longer because there's more risk involved for sellers, and sellers tend to be more hesitant putting their homes on the market, whereas buyers can do a lot of their home search online and not really have to go very many places, so it's a little bit less risky for them. But as these restrictions start getting lifted, we're going to start seeing some of those sellers become more and more comfortable, like I was saying, put their home on the market and take advantage of this extremely high demand. Okay, so that's the numbers for Southern California. So let's take a deeper look at Orange County specifically. So for Orange County in the month of May, demand has gone up by about 43%, which is still significant compared to supply, which has only gone up by about 7.25%. So even though supply is going up a little bit quicker in Orange County than the rest of Southern California, we're still firmly in a seller's market, any price point under $1 million, and we're in a balanced market on the price points between $1 and $1.5 million right now. Anything above that, we're still in a buyer's market, and usually those price points above 1.5 are very close to a buyer's market, or almost always in a buyer's market, just because the demand is not there compared to those lower price points. So again, this is similar numbers to what Southern California is showing, but supply is a little bit better in Orange County than the rest of Southern California. Okay, so the last data set that I want to go over before we get into the news and what's been happening over the last week or so in the market is that expected market time that we talked about a little bit earlier. So for Southern California, the expected market time right now is only 72 days. And why that's significant is because last year at this time, the expected market time was actually higher at 76 days. So that's just another indication that shows you how much demand has gone up over the last couple weeks, because we're technically in a hotter seller's market right now than we were last year at this time. So that's something to keep in mind for those buyers out there that are waiting for the market to crash. Right now, homes are appreciating. Right now, we're having multiple offers on a lot of homes, especially under the $1 million price point. So if you're waiting around hoping for the market to crash, the data is just showing that's not going to be happening anytime soon. So now that we got all the data out of the way, I wanted to go over some of the positive news we've seen this week in the forbearance and the foreclosure part of the market. So you've seen a lot of stories about doom and gloom, but over the last week, a lot of data has started to come out that's showing how this is going to be mitigated and not become as big of an issue as a lot of people are thinking. So the first thing I want to talk about is that Fannie Mae and Freddie Mac came out with some new guidelines in terms of how people would be repaying the loan if they went into forbearance. So before, they came out a couple weeks ago and said, hey, there will be no balloon payments, so you're not responsible for this giant chunk of payments at the end of forbearance period. You'll be able to pay it off some other form or some other way. Now they've come out with some more specifics and giving you a little bit better idea of how they're going to go about doing this. So I just want to read really quick what they're saying. So under the new program, borrowers who took forbearance due to coronavirus-related issues will not have to repay their missed payments until the borrower sells the home, refinances their current mortgage, or the mortgage matures. And they're also saying there'll be no additional interest charged because of this. So what does this mean? So it means that homeowners that have a government-backed loan are just going to have more options available to them to be able to repay this amount that they're foregoing right now on either the back end of the loan or when they refinance or sell the house. And the nice thing about this as well is there's no interest charge. So you're not basically being penalized for having this forbearance issue. You're able to pay it back when you sell the house, when you refinance the house, or when your mortgage matures. Let's say it matures in 10 years from now. You have 10 years to save up whatever you need for that chunk of payment that you missed to be able to pay at the end of the mortgage. So it's great news for keeping people out of foreclosures and for people not having to sell their homes. And this is, again, something that I talked about last time that really is not going to become an issue until next year anyway. But this will help reduce some of those people that were in financial hardships that weren't going to be able to pay it back quickly. It's going to give them some more options on the back end to be able to keep their house and not have to sell their house. So this is great news for that market going forward next year, that we're not going to have a giant wave of these foreclosures hitting because of all the forbearance people have taken over the last couple months and will continue to take until they can get some more financial security. So one more news story about forbearance that I did want to bring up really quick and talk about is that LendingTree just released a survey they did a few days ago of all the people that they had currently in the forbearance, and it basically showed that 70% of the people that took the forbearance option didn't actually financially need it. They took it to be precautious in case something happened where they lost their job or they needed that cushion of savings, but in terms of making their monthly payments, they didn't need to take it. They just took it because it was an option available to them. So this is good news, because this is going to show that once these forbearance periods are over, the chance of them being able to make their monthly payments is pretty high. So the other part of the survey released said that only 5% of those people that took the forbearance option said that next month they wouldn't be able to make their mortgage payment without the forbearance on there. So again, this is showing that a lot of people in forbearance right now, it seems to be like they're doing it as more of a precaution and to bulk up that savings account just in case something happens. So hopefully once this is over, we start getting back to normal, or as normal as you can get in this current economy, that these people will start to be able to make their monthly mortgage payments, and because of all the different options available to them right now, especially on those government-backed loans, are hopefully not going to be affected with this financially by taking that forbearance option. So the negative part of this is that one of the main reasons the financial industry for mortgage loans right now is stressed is because so many people are not paying, that the service providers are still on the hook for all these payments. So they pay their investors still, but they have no money coming in. So now they're depleting their funds, and this is basically causing mortgage loan to tighten up the way they do their loans. So some of the loans, like jumbo loans, harder to get right now. Some of the FHA loans, they've increased credit scores to what you need to do to qualify for them. So because of all these forbearance options that people are taking, it's really putting a strain on the lending side of things. Now, again, this is just one survey. This doesn't represent everybody taking forbearance, but from LendingTree, which is a pretty big company in the mortgage industry, to say that 70% of people didn't really need to take it financially. They just did it more as a precaution. It's a good indicator that next year, once all these start coming out and people start paying their mortgages again, we're not going to have a lot of foreclosures on our hands. Okay, so speaking of foreclosures, one of the big concerns I had was how many renters were still paying their rent on time to their landlords, because there was a lot of stories, especially in the beginning of April, that were saying, hey, these renters aren't paying, and because of that, the landlords aren't collecting, and because of that, they're not able to pay their mortgage and they're going into forbearance. So a lot of data has come out to actually show what's been happening in the month of April as well as May. And it's actually a lot more positive than you might think. So I just want to read some of these numbers to you. So in the month of April, 94.6% of renters made their payments. And that sounds like a lot. And even compared to last year, when 97.7% of renters made their payments, we're only looking at about a 3% drop in the amount of people making payments on their rentals. So yes, there are people out there that have lost their jobs and can't currently pay their rental, but the majority of people are. So this is a good indication, again, that we're not going to have this giant wave of foreclosures happening next year when all this stuff really starts to take shape. A lot of renters are actually still paying. And the other thing I wanted to bring up, which is a little bit even more surprising until you kind of figure out the reasons why, is in the month of May, there's been more on-time payments in the month of May than there was in April. And so the big reason this is happening is because those stimulus checks have hit bank accounts. The unemployment is finally starting to come in, so they have some money in their bank accounts and people are starting to pay their rent again. So it's looking up as of today that the rental payments made on time in May is actually going to be higher at the end of the month than it was in April. So that's a good indication that these rental markets are still strong for those people that are paying rent, and hopefully this will keep a lot of those second and third mortgages out of the forbearance and foreclosures when those start happening at the beginning of next year. And like I said, there will be an uptick in those foreclosures happening because some people will lose their homes, but the amount of people losing their homes because of this is going to be significantly less than a lot of people were thinking when we're looking at the numbers at the beginning of April. So this is great news for the housing market, because come next year, we're not going to have this wave of foreclosures that's going to drive down prices or anything like that. There's just really no data showing and supporting that's going to happen. Yes, we'll have some, but you're not going to have the amount that a lot of people were thinking when this all first started. Okay, so I know I've been talking a lot about the positive news that's been happening in the housing market, so I just want to take a step back and put a giant asterisk by this, because yes, this is all based off of what the trends and what the numbers are showing, and that's why I like to use a data approach. But something significant could happen in the future with the coronavirus, where we have to go on a secondary lockdown, or it takes significantly longer for us to open up the economy again, and that can create a lasting impact on the housing market. But where all the trends are going right now and what the data is showing is the beginning of June is basically where we're going to be starting our spring market this year. So the beginning of June is going to be very similar to what you usually see at the beginning of March. So I'm expecting June, you're going to start seeing a lot of homes start hitting the market. As we go through the month, you're going to start seeing a significant amount of homes hit the market as long as we continue to ease these restrictions. And we're going to have a very active market at the end of summer, going through fall, all the way through the holiday season this year, because there's a lot of pent-up demand and a lot of pent-up supply that people just aren't comfortable putting their homes on the market yet. They will have to put their homes on the market at some point this year if they do want to sell them. And that will most likely happen, let's say, in the next 3 to 4 months. The last story I want to talk about today that I thought was pretty interesting, that I saw both from Redfin and Zillow, is their predictions on where the market is going to start being the hottest because of all these shutdowns and lockdowns that have happened because of the coronavirus, and what areas are going to be suffering the most. So suffering the most, we talked about it last week, and I still think it's going to be the same, are those vacation rental markets. Those places with short-term renters where they were locked down, they weren't able to have anybody in their properties. Those places and those people that own those homes are going to have the hardest time keeping up with their mortgage payments. So those places will be impacted the hardest. Again, like I said last week, you really won't see the impact of that until 2021 when these foreclosures start hitting the market, because it takes 6 months to a year usually before this foreclosure process to happen. so you won't see this until 2021, but I expect those markets to see a little bit of a softening in 2021, especially, like I said, in Big Bear and Palm Springs around us, but any vacation market rental areas in general. On the hot side of the area where we think and where they're starting to think that people are going to be moving to is going to be the outskirts of the city. So as a lot of people are now working from home, a lot of companies are realizing, hey, we don't need to have as big a building. We can have half of our staff work from home and still be profitable. So a lot of people are starting to think that, hey, maybe we don't have to commute as much. And so these places outside the city, they're projecting are starting to get a little bit hotter. So places like Corona, if you're looking at Orange County specifically, Corona, outside of the Orange County bubble area. Those places that are still great places to live, but a lot of people didn't want to make the commute, might become more interesting to those people that now, let's say, have a job where they only have to go to the office once or twice a week or not at all, and they can do it from home. Because prices are so much lower there, they don't have to travel as much back to Orange County. That market could be heating up soon. So I just thought that was interesting. It's something to look out for. If you are looking for investment properties, that type of thing, it might be a good market to watch, or those outskirts of the city, away from the city centers, because those markets, especially for people that are able to work from home, are going to start being a little bit more interesting and a little bit more appealing to them when they don't have to worry about the commute time of sitting in traffic for an hour every morning and every night getting to and from work. Okay, so one last thing I want to leave for both buyers and sellers. So buyers, if you've been thinking about getting in the market or you're actively looking right now, interest rates are extremely low. So 3 weeks ago, they bottomed out at all-time lows, but they're still hovering around historic lows right now. So if you're getting into the market, you will need to anticipate, especially under the $1 million price point, that there's most likely going to be multiple offers on a lot of these homes that you're placing offers on. So there are a lot of other ways that you can put an offer on a home besides the price that can give you a leg up over everybody else. So make sure you talk to your agent about some of those options, as well as lenders, because lenders do have some options they can do to help you out with the offer as well. So make sure you're in coordination with your lender and your realtor before you put in an offer, to make sure you're putting your best foot forward and giving yourself the best shot of getting it. As for sellers, if you've been thinking of entering the market and you're okay taking the safety steps required to make sure that you're safe, your family's safe, as well as you're keeping the buyer safe when you sell the home, right now is an excellent time, especially under that $1.2 million range, to get your home on the market where the competition really hasn't started heating up yet. Over the next few weeks, I expect to see a lot more homes hitting the market, which for sellers, that means a lot more competition and less buyers looking at your home. So if you're thinking about placing your home on the market, you really want to make sure you're getting yourself ready, talking to an agent, getting those pictures taken, and getting ready to put it on the market as soon as you can, so you can take advantage of this large pool of buyers that are looking for properties and just don't have enough to choose from right now. So other than that, I hope you have a great rest of your week. Enjoy your weekend. It looks like it's going to be nice and warm, so hopefully you're out and enjoying the fresh air. And I'll see you again in probably about 2 weeks from now. Have a great day. Bye.